This episode is about Uber stock. It's the multi-bagger that the market doesn't care about. I personally own some of the stock. I feel like this episode will be useful even to those who are familiar with the stock. I will put bookmarks within the video so you can skip to somewhere that you feel is more useful for you. Anyway, let's get into it. The stock we're talking about is Uber Technologies. Business is thriving, but the market doesn't care. Uber's growth and valuation could translate to tremendous returns, and I think it could be a multi-bagger. Active users is up 13% year over year. Engagement is even higher, with total rides up 17% year over year. So this means that the people that are using Uber app are booking more rides on the app than ever before. Revenue is up 22% year over year for Q3 2024. So revenue is growing incredibly fast. So this is a fast growth company. Free cash flow is exploding from the negative in 2022 to 6 billion trailing 12 months in Q3 2024. Earnings are set to grow incredibly quickly, 30 to 40% next year, analysts estimate. So this is an incredibly fast growing stock. Also, it is a dominant stock, with Uber controlling 76% of market share in the US for ride hailing and 25% of global ride hailing market share, which is the largest in the world. And really, Uber are the only global ride hailing service. So we've got a really fast growing stock, but for some reason valuation is really low, with a forward PE ratio of 20.7 and a free cash flow yield of 4.2%. So why is the stock so cheap? Essentially, it is because Waymo have announced that they will expand to Miami with no mention of Uber. So Waymo are the autonomous taxi service that have opened in Phoenix and Austin, as well as one other location, and previously they had collaborated with Uber in these locations. But for this expansion to Miami, they have not mentioned Uber one bit. So investors are worried that Uber won't be able to compete with autonomous fleets that don't have to pay for drivers. Essentially, Uber's cost of revenue is about 60%, and most of that is paying for drivers. So investors are worried about that, and hence the stock is trading really low. However, this argument doesn't hold up particularly well under scrutiny. This is a trigger warning for all the Tesla fanboys, but I think there will be many providers of autonomous vehicles, not just Tesla and Waymo. There are plenty of other people working on autonomous driving, and it's just a matter of time until this software gets licensed to larger car manufacturers. Yes, Tesla may be the first people to achieve full self-driving, but placing the bet on them might not be the right decision. The bigger winners might actually be Uber. So here's why I think having separate apps for each brand of auto taxi will not work. So demand will be spread between the apps. This will mean that the users are split between apps, which means that you will have lower demand on each app, and this will increase wait times. No consumer wants to be waiting for their taxi for a long period of time. If one app tells me I have to wait for a taxi for 15 minutes, I'm just going to go on Uber and order a taxi, and it'll be here in 2 minutes, 3 minutes, 4 minutes, less than sometimes. Now, these companies also may oversize or undersize their fleet, meaning that the companies will either overspend on oversizing their fleet and the cost will be passed on, or they will undersize their fleet and wait times will be higher, leading us to that same element of increased wait times, losing business. Now, widespread autonomous fleets are further away than you think. Waymo is only SAE level 4, which is not permitted to drive in all situations, and Tesla is only SAE level 2. Plus, states and countries need to pass legislation and infrastructure needs to be built in order for these auto taxis to run. So this is going to take a lot longer than people think. They think it's right around the corner, 1-2 years. I believe it's more like 5 years at the very minimum. At maximum, I'm looking at like 7 years. Now, in the very distant future, once a car company makes an affordable self-driving system for personal vehicles, the likely scenario is they will license that software to other car companies for big bucks. So let's say Tesla finally come up with a software that allows full self-driving only using cameras. It's not like other car companies will not have the hardware, and all that Tesla will need to do is license their software to another car company, and they'll probably make a lot of money from it. So that'll be good for them. But it means that there will be more brands of cars that can autonomously self-drive. So once personal vehicles can drive autonomously, potentially people can loan them to a company's taxi fleet. Can you imagine that? Your car being an asset? That would be incredible. This is Uber's approach. Uber can partner directly with a producer to make cars with the sole purpose of being an Uber. They can allow any individual with an autonomous vehicle to use their car as an Uber, as we spoke about in the previous slide. And they can list different autonomous taxi providers in their app for a fee. So this is what they're currently doing with Waymo. They're doing that in Austin, Phoenix, and one other place, I believe. So Uber aims to combine these methods above, as well as using human drivers in a hybrid system. Now this would be ideal because it will allow Uber to transition really smoothly into the autonomous vehicle realm. Another thing about Uber's approach, which I view as a good thing, is that the company isn't spending billions on the latest Nvidia chips like Tesla or Google. The design and manufacture of autonomous vehicles is extremely costly and time consuming. So instead, they're doing what Uber does best and is passing the cost or allowing other businesses to spend money on autonomous driving and then reaping the benefits themselves afterwards by leveraging their huge network. Here is a clip from the Uber CEO about how Uber is approaching autonomous vehicles.
What I want to also move on to is AVs.
Yes.
You years ago had decided you were going to do your own autonomous vehicles.
Yes.
Now you're partnering with Waymo. You're partnering with a number of different companies.
Yes.
Why this strategy now?
Well, I think first of all, companies have to stick to what they're really great at. At Uber, we build software, we build networks that, on a concurrent basis, we just hit 1 million concurrent trips, 1 million people taking Ubers at the same time, which for us was a big deal. As I looked at the capabilities of the company, we just weren't a hardware shop, right? So building out self-driving, it takes deep research and it takes a huge amount of hardware talent. And for us, we build AI algorithms, matching, pricing, dispatch, etc. And it's very difficult. There are very few companies that are great at hardware and software at the same time. And for me coming in, I wanted to really, really focus on what we're great at. And at the same time, when we looked at the environment, at the autonomous environment, we saw many, many players who were developing the technology. And our having the technology in-house essentially made the rest of the industry competitors. We don't manufacture our own cars, right? So I believe that 10 years from now, for example, AV software is going to be built into every single car sold, every single new car sold. And so we didn't want to essentially be in competition with the AV development environment. And we thought that our best place in the AV ecosystem is helping these AV developers who have spent now tens of billions of dollars in research, etc. The cost of hardware is going to be more tens of billions of dollars. We think what we can bring to the industry is monetization and go to market. And so we have essentially the network that will bring demand to AVs. We operate in over 70 countries. We now have fleet partners all over the world who can essentially operate these fleets, depots, recharge, clean them, etc. And we think that the demand that we bring to AVs can essentially help AV providers develop financing as well, so that just like you can finance your car with a lease, you'll be able to finance AVs as well. So we think that's the best way to engage with the ecosystem. And just like we partner up and work with every car manufacturer out there, We want to partner up with every AV developer out there, Waymo, and many, many others.
So here are some of Uber's partnerships towards autonomous vehicles. Recently, they bagged a really good deal with NVIDIA. Essentially, Uber's trip data will be used. Let's not forget that Uber has the largest market share and has the largest amount of trip and location data of any company on the planet, really. Now, they'll use that data along with NVIDIA's Cosmos platform and DGX Cloud to improve AI model development. Essentially, the Cosmos platform is a platform that is used to train autonomous vehicles within a simulation. It essentially enables people to train physical AI a lot faster. Uber have partnered with Waymo. Now, Uber already offers Waymo vehicles in Phoenix and plans to expand to Austin and Atlanta. There we go, there's the other one, Atlanta. So that partnership with Waymo is already on the Uber app. You can already order autonomous vehicles through Uber. So people saying that Uber are going to miss out on autonomous vehicles, I think, are completely in the wrong. They're already offering autonomous vehicles, and I just don't think they're going to get pushed out of this market. Uber have also collabed with WeRide, which is a Chinese mobility company, and are working together to add robotaxis to the Uber app in Abu Dhabi. Uber and Avride are also working together to develop autonomous delivery and mobility services. So from the looks of things, these are more for the Uber Eats side of the business. Uber have also partnered with Wave, and Uber aims to add autonomous vehicles to its global ride-hailing network using technology developed by the UK-based startup Wave. So anything that Wave produces will become an Uber. So Uber currently trades at the price of $68.73, which I think is incredibly cheap. Here are some of the valuation metrics I showed you earlier. Has a 20.97 forward PE ratio and a 4.15 free cash flow yield. Now I'm just going to show you some of the quarterly results trailing 12 months. So this is the past 4 quarters added together. You can see that revenue is growing incredibly quickly over the past year, up 16% over the past 2 years, up 20% over the past 5 years, 26.31%. This is a fast growing company. If you look at the price and we look at past year, you can see that from the beginning of 2024 till now, the price has pretty much been flat. I mean, it's gone up 4.24%. So it's barely moved, especially when the market has gone up so much. This is definitely a stock that has fallen from grace. So it was around here when the announcement with Waymo was made, and then it dropped down to here. This is where I originally bought the stock. I will continue buying though, because I think that anywhere in the price range of about under $80 is perfect. Here you can see what I showed you before with the monthly active platform users increasing and the trips also increasing. It's 20% year over year with the trips, up to 10.81 billion. Just wanted to show you the gross bookings quickly as well. You can see there 3 categories. They're diversified categories of mobility, which is taxis, delivery, which is obviously Uber Eats and Uber Groceries and that side of the business, and then freight, which is much smaller, this category. Here is the EBITDA. As you can see, it's gone from the negative in 2022 up to 4.61 billion in Q3 of 2024. Here's the free cash flow I was talking about, up to 6 billion from negative in 2022. Here are a few bull cases for competitive advantages for Uber. Here's one that I'd like to highlight is their operational excellence in fleet management. Now, before we were talking about how companies may oversize or undersize their fleet. Now that will not happen for Uber because they have decades of developing fleet operations. This will translate to both cost saving and enhanced service delivery capabilities. So just basically speed of taxi rides, speed of your Uber Eats deliveries arriving. Another thing you might not know about Uber is that they have their Uber One membership program. So this is really good because that subscription model always offers great growth. This is boasting a 70% increase year over year to 25 million members, which demonstrates strong consumer retention and increased user frequency, significantly enhancing customer lifetime value. Also, last thing to check is their balance sheet. So they have 10 billion in cash, 12.48 billion in debt, and 1.5 billion in capital lease. So I think their net is, let's have a look. Okay, their net is about 990 million. So they're in good financial health. Here's some things that you may not know about Uber stock. Uber plans an accelerated buyback share scheme of 1.5 billion US dollars. This is obviously a good sign because it shows that Uber has faith in what it's trying to achieve, and more importantly, share buybacks returns money to the shareholder. So Uber aims to be the number 1 or number 2 ride-hailing service in each area it operates. If it fails to achieve this, it buys shares in the winning ride-hailing service. So for example, Uber owns 13% of Grab, which is a ride-hailing service that has about 70% market share in Southeast Asia. I recently went to Thailand and I use Grab all the time, and I was thinking, what happened to Uber? Uber used to be in Southeast Asia, and what they did was they ended up selling their business because it was a third place. They sold their business, and what they did with the money was they bought Grab shares. I think they bought 27% of Grab at the time, and since then they've slowly sold bits off, so now they own only 13% of Grab. But I think it's a really good way of having your fingers in all pies. Uber recently received a better debt rating from Moody's and Standard & Poor's. And now you might go, why is this relevant? Well, this means that they will spend less on debt repayments. So this will increase cash flow, which is just a bonus that I thought you guys should know about. So what have we gathered from this episode? We have gathered that Uber will not be left behind in the autonomous taxi market, and they are likely to benefit from it. They have loads of collaborations. They're not letting this slide past them. And they're in the best position because they have what nobody else can replicate, which is a 76% market share in the US and a 25% market share in the entire globe. We have established that Uber is trading incredibly cheap considering its analyst growth trajectory. And we've established that Uber realizes this and is buying its own as stock. It's only a matter of time until the market realizes Uber should be valued higher. We have established Uber's approach and their aim to be the super app that's covering all bases of autonomous ride hailing. Here I just wanted to show you my portfolio and my holding of Uber. So if we scroll down here, you'll see that Uber Technologies is my 5th largest holding. I plan to make it larger than Texas Roadhouse. Probably S&P Global. After my next paycheck, I'll probably bring the holding up to around 4,000, maybe a little bit higher, 4,100, 4,200. So yeah, I bought Uber at around a month ago, and yeah, I bought it at 61.80, and I've made about 11% on that. As always though, do your own research. Don't just listen to some random fella on the internet.
Pizza time.
You're late.
A wizard is never late.
I'm not paying for those.
Why?
You're late.